Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Friday the 2nd of the 4th, 2021. Time is 0450 GMT, Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday then, Thursday the 1st, we had a negative opposed driver in the dollar at minus 109, front and back door flows, mainly going into the euro at plus 90 and the pound at plus 89, so very balanced. And the yen was the negative rock at minus 70, activity plus or minus 179. Intra-week then, most relevant now because this is Friday, from Monday the 29th open to about 15 minutes ago, we've got an unopposed negative driver in the yen at minus 352, so no backdoor flows, predominantly going into the pound at plus 274, the dollar at plus 47, and the euro was the positive rock at plus 31. Activity plus or minus 352. Finally, intraday then, this is what's been happening in the Asian session to about 15 minutes ago. We've got a positive unopposed driver in the pound, plus 25, no backdoor flows. The flows mainly coming out of the yen, minus 14, out of the dollar minus 8, and the euro is the negative rock at minus 3, activity plus or minus 25. What's going to knock this about then? Well, it's NFP day today, very light NFP day actually, because that's pretty much the only data, the data immediately surrounding the NFP, the usual stuff. Looking next week, Monday we've got US service PMI, and Tuesday we've got the AUD rates decision. So that's something to bear in mind. We've had the infrastructure stimulus bill in the States, Biden's stimulus bill. Arguably they're saying that's going to be paid for by increasing corporation tax. Very unlikely. It's going to be paid for by printing. At the moment the States is printing 55 cents on the dollar, and that's likely to increase. Now, if you print, the debt is in the United States is approximately 30 trillion and rising. That is a debt that cannot be financed through taxation. It has to be inflated away, basically. And the way they inflate it away is by printing and reducing the purchasing power of the dollar. And that is significant going forward over the next few years. The dollar is going to be significantly soft going forward. Right. Let's have a look at what's been happening in the wider markets. Just get rid of this. Right, so we've got the Easter holidays. We've got the Asian markets pretty much on market break. We've got thin liquidity. We've got thin data apart from the NFP. We've got euro as a complex. The 7 pairs is weak, except against the dollar and the yen, which are weaker. The yen is weak across the board. The pound is weak, except against the euro, the CAD, the AUD, and the NZD. So the commodity currencies basically. The Swiss franc is weak, except against the yen, the dollar, and the euro. The CAD is strong, except against the pound, the AUD, and the NZD. The AUD is strong, except against the NZD. The NZD itself is strong across the board, and the dollar is weak, except against the yen. Right, so you've got yen weakness, we've got New Zealand dollar strength, and take your pick in the middle. Right, let's look at the other asset classes and then make some sense of what's going on. Right, so what do we got? We've got US 10-year, sorry, US dollar index. US dollar index, basically it broke and then it broke the second and it's above there, so the dollar is relatively high, quite high. Gold has bounced to about 0.2, so we've had a significant bounce coupled with the fall off in the dollar really. Oil's operating at about 0.33 from the high. Wall Street broke, went back to the resistance, and it's broke that again, and it's about there. It's above the second high, and then S&P. S&P's pretty much higher actually. S&P's relatively come up more. So, and then we've got the tech. The tech never made it, and it's operating at about 0.33 from the high. US 10-year and the bond. Remember, these are prices. It's about 0.125. It's about an eighth from the model floor. So yields are pretty much still up there in the US 10-year, and the bond is about 0.4 from the floor. So again, we've got this relative higher yields in the US than the European yields in the bond. Right, copper. Remember, we had these 5 pumps. It basically came back to the second pump, went back to base camp, and has been messing about. It's now minus about 1.75 on the pump. Right, US steel, the final one, sold off at the double top, and then it's basically broken through and come back, but it's still higher than the double top. Right. So let's clear that off and talk about what we're doing. Our trades have come back to about 1,200 points profit from a peak of 2,900. We've added some trades. We're now short. Effectively, this is short the USD against the euro, the pound and the AUD. So we're long euro against the USD, etc. We're short the NZD against the euro, the pound, the CAD and the AUD. Right, so that's where we are, and we're about plus 1,200 points profit from a peak of 2,900. It's been messing about. At the moment, the market is basically not firing in terms of our macroeconomic view, but it will do. The second quarter is now going to be delayed with this Easter break, and then we're going to come back strong, and we're sure of it. So the key thing is here is we're short the USD, and we're short the NZD due to its positioning, but effectively we're in the same game as being long NZD because these will outgun them. The AUD particularly is, in our view, is going to start screaming, and the CAD. And the pound is likely to be very, and the euro's relatively neutral, but the pound is likely to go up. So I hope that was useful. Hope you're going to have a good Easter break. Try and catch the weekly review and the data review tomorrow. Thank you very much.